It was definitely a roller coaster last week. We had some highs and some lows, ended up on top, which was good to see after the rough patch we've been through over the last month. Big tech really came out of last week a winner. And so we had a couple of comebacks throughout the week. So we'll jump into that and talk more about it. So this is your Market in Minutes report. I'm Mike Minter, Chief Investment Officer with Financial Synergies. And we're looking back, of course, on last week, April 22nd through the 26th. So let's dive into it and look at some of the numbers. We have our 5-day performance here, Monday through Friday. As I said, we ended up on top, but it was a roller coaster ride throughout the week. As you can see, everything nicely up, particularly the tech-driven NASDAQ. And so we'll talk a little bit more about that, but big tech had a big week. Good to see after kind of a real drawdown over the last few weeks. Year-to-date performance, inclusive of last week, was just great. I mean, we've brought up all the year-to-date averages for 2024, which is good to see. Still hoping for small caps to break out at some point. It's just been a tough environment with rates, and these small capitalization companies have a hard time, economically speaking, when rates are and inflation are kind of rearing their head. So. Rates in general, though, did tick up last week. It wasn't anything too dramatic, but the 30-year is now at 4 3/4, 10-year at 4.6, 2-year at basically 5, and the 30-year mortgage at 7.67. We did see quite a bit of an uptick in the 30-year mortgage, so not great for home buyers and in the home market in general, but hopefully we'll see that start to tick down over the next few months. Stocks, as I said, did bounce back twice, so up and down, up and down. So last week opened with a rebound rally as investors breathed a sigh of relief that this Middle East tension had kind of eased a bit. Certainly not out of the woods by any stretch, but it did ease. The market rally extended into Tuesday with investors cheering positive corporate earnings. And by Tuesday's close, the S&P had gained 2% on the week. So again, started off strong. Investor enthusiasm didn't last, though, as profit taking occurred midweek in all three of the averages. Rising bond yields threw a wet blanket on market momentum, and at one point the yield on the 10-year Treasury note rose more than 40 basis points from its low earlier in the week. That's a big jump for Treasuries, so not good. On Thursday, market slipped on two fresh pieces of economic data: gross domestic product, GDP slowdown, and higher consumer prices. So a slowdown in growth and higher inflation, so not great. But by midday, selling pressure slowed and stocks pushed higher on Friday behind upbeat Q1 reports from two mega cap tech stocks, helping the S&P and the NASDAQ post their best week since November. So very, very strong week in terms of overall returns. So let's jump into the economics a little bit. Earnings versus inflation. So corporate earnings and economic reports battled it out last week. In the end, earnings won, at least for this week. The big economic news was that this first quarter GDP grew at a 1.6 annualized rate. So this was slower than 2.4 that the economists expected and less than the fourth quarter in 23. But the GDP report seemed to support this Goldilocks economy theory. So in other words, it's not too hot, but it's not too cool. And so may give the Fed an opportunity to reduce rates sooner rather than later. And this is a story, a narrative that the markets and investors have really favored this year. So this leads us into the PCE, the Personal Consumption Expenditures Index. So this is the Fed's preferred inflation gauge, and this was embedded within this report, the GDP report. Excluding food and energy, it increased 2.8% from a year ago. So it was unchanged from February and slightly higher than expected. So it joined a growing list of factors pointing to an uptick in inflation, complicating the Fed's interest rate decision. So that's what this year has been about, essentially. So this was indicative of inflation not really coming down to a point where they feel comfortable and confident saying, okay, great, we're ready to roll and we're going to start reducing rates. It hasn't happened yet, but it's good to see that the economy is not heating up to a point where, the Fed's really got to lay off the potential rate reductions, or even worse, have to increase rates, which would be really bad. It's not really indicating that aggressive of action right now, but still the narrative, the entire market scenario right now is rolled into whether the Fed is going to be able to lower rates and when the Fed will be able to lower rates. So more of the same there. But nice to see some positive gains there last week. So key economic data Tuesday, we have a lot going on here. Employment cost index, Case-Shiller, home price, consumer confidence. We have the FOMC announcement. So this Fed Chair Powell will be speaking on Wednesday press conference. That would be a huge one. All eyes will be on the Fed for sure. Treasury refunding announcement, ISM manufacturing and petroleum status report. Thursday motor vehicle sales, that's a big one. Jobless claims, another big one. Friday employment situation. So we've got a lot going on this week. There are going to be a lot of data points coming out that we'll need to keep an eye on. A lot of earnings going on here throughout the week. Tuesday, Wednesday, Thursday, we are full on earnings season here. We got Amazon on Tuesday, Coca-Cola. Wednesday is MasterCard, Qualcomm, ADP. Thursday, we got Apple, Amgen. These are big names. Friday, Berkshire Hathaway. We'll get a lot of news coming out in terms of earnings and direction within the overall markets this week. Folks, I appreciate you tuning in. As always, here's all our contact information. If you need to get a hold of us for any information, client or not, we'd love to talk to you about your finances, your financial planning needs and investing needs. Hit that subscribe button down below. We'd love to have you as a normal subscriber. Get all of our videos as they come out. Appreciate you guys tuning in. We will tune in with you next week and we'll recap the markets for you. Thanks, guys. Appreciate it. Have a good week.